Thanks for joining us at XM.com. You're watching the Daily Market Comment by Raf Boyajian. I'm Cristina Marujos. The Trump administration and Democrats appear no closer to finding a compromise deal on a new virus relief package as the latest efforts to kickstart the negotiations prove fruitless. President Trump has signed executive orders to provide a stopgap while lawmakers bicker over what the next bill should look like. However, despite the uncomfortable prospect of a long delay, there is little panic in the markets, with most investors betting on some kind of a deal sooner rather than later. The fact that both parties have not shut the door to fresh talks underlines this view, though in the short term, the lack of progress is dragging Treasury yields lower. The US dollar followed yields lower, sliding against the yen, euro, and pound. Gold made up for lost ground on Thursday, making its way up to the $1,930 an ounce region. However, the precious metals rebound was more to do with the lift emanating from the weaker greenback than safe haven demand. European shares opened slightly in the red, while US stock futures pointed to small losses on Wall Street later today. The S&P 500 came within a whisker of February's all-time high yesterday after stocks got a major boost on Russia's announcement of a vaccine for COVID-19, although many experts are skeptical about its effectiveness. In the meantime, increasing signs that the economic recovery around the world will be a bumpy one are fueling expectations that further monetary and fiscal stimulus support is inevitable, creating the perfect combination for risk assets. A slowdown in America's virus infection rate is also supporting risk sentiment. That optimism will be put to the test, however, when the U.S. releases the latest weekly jobless claims later today and retail sales data for July tomorrow. Washington's relations with Beijing will also move back into the fore in the coming days when U.S. and Chinese negotiators are due to meet to discuss the implementation of the Phase 1 trade deal, as well as the White House's war on China's tech giants, TikTok and WeChat. There's only been a muted response so far in the markets to the escalating tensions, so it will be interesting to see how much lower relations will have to sink before investors begin to take notice. This was today's Daily Market Comment. Thanks for watching at XM.com.